With this early action in Bitcoin proxies, my miner and MicroStrategy positions have become uncomfortably large compared to my spot Bitcoin and overall equity holdings. Miners alone account for about 30% of my overall equity and crypto holdings, and I've sold the laggards already. I don't want to pivot too early, but am I breaking personal rules by not rebalancing? Was thinking of pivoting some profits to alts and Tesla. Play it safe or let it ride. So this is such an important question, and I too suffer from this. So I'm going to go through a set of rules and guidelines that I follow, and how certain rules, of course, get modified or get skewed because of crazy market situations. First of all, kind of like my old proverb, you've heard me say this many times, focus on the 1%, cut the losers, let the winners run, let the winners ride, whatever. They're kind of things you always need to think about. Probably the most important thing is having that focus on the best assets. I do extraordinary amount of work to tease out winners. I analyze, literally, if I analyze 100 tokens or 100 stocks, I only want to find one. I'm not looking for 10 or 15. One. I pick the best one. And you'll see that pattern in all of my choices as well, especially in a few minutes. So first of all, rules and guidelines. The rules are guidelines. And this is a funny little meme. It's more than what you call a guideline than an actual rule. So I just thought that was funny. I couldn't really find anything trying to reflect. But again, when I say don't lend out your crypto, more than 10% of your crypto, that certain thing I mean. Don't invest more than 10% in Bitcoin miners, especially when they're very risky during the bear market. That's what I mean. But then when a winner explodes, that goes out the window. That's kind of what I'm stressing here. So let's talk about allocations for a second. The importance of allocation in the bear is really to avoid excessive risk exposure, because things like miners, etc., you don't know which way they're going to go. Things like altcoins, you don't know which way they're going to go. But when you do find the winners, that's when you stack them. You stack them well, because you know if they do run, they will become exponential. And exponential returns on investments during bull markets, highlighted by our successes in the community with things like MicroStrategy, Solana, CleanSpark, can significantly skew or alter portfolio allocations. And adhering to my other principle of let winners run, accepting the resulting imbalance in portfolio distribution is par for the course, ladies and gentlemen. Also, the largest holding in my portfolio now, this is kind of crazy, and I'll share it with you, is MicroStrategy. And this was a tiny position, as was Solana, a tiny position. I think a year ago, Solana was 5% of my portfolio. Now it's a lot bigger. MicroStrategy was like a tiny piece, but due to the power of options, it became monstrous. My biggest position today is MicroStrategy by far, and yes, it completely dominates my Bitcoin position, just like you, Mr. Apologist. So it's okay. Now let's talk about a couple of other rules. You have my rules. Let's talk to one of the legends in the space, Stanley Druckenmiller. I did share this on Patreon earlier in the week, and I thought it was very appropriate to bring up again. He is a well-known investor with a wonderful reputation for his strategy and long-term success. But he has I kind of break this quote down. I'll read the quote and then pull out the 5 rules that I see. 1, to build superior long-term returns is through preservation of capital and home runs. So don't lose your entire bag on a risk, but if you get a home run, stay in it. And when you have tremendous conviction on a trade, you have to go for the jugular. And also the final part, it takes courage to be a pig. So let me try to break this down and how I interpret it as well. So it does provide a lot of insight into his approach to investing, which is not dissimilar to mine at all. And by the way, I've studied all the great investors for over 30 years. So maybe I've been absorbed into them or the way they think. So preservation of capital, critical. You should avoid unnecessary risks that could lead to large losses. Also, don't sit on losers. That's another element I would add to that too. Protecting investment capital is a priority, and ensure that money is available to invest when good opportunities present themselves. I always have a little bit of cash on hand in case there is a screaming deal. Home runs. These are investments that yield exceptionally high returns. I have one option trade that's running up to like 1,000x right now. It's kind of completely insane. But that's what happens. Meta last year was the same. Nvidia. Some of these things are just home run after home run after home run. And these score big, big life-changing returns. And that's what we're trying to do here. But again, don't risk your capital to YOLO into these home runs. But sometimes you get a whole bunch of them at the same time, which is amazing. And that conviction as well, having a very high belief or confidence in a particular trade or investment. That's me in Solana. That's me in Tesla. That's me in Bitcoin. That's me in Nvidia. That's me in MicroStrategy. I spend years finding the winners, and then I go for the jugular. This is the idiom that means you target the most crucial area for a decisive victory. And in investing, that's having high conviction in an investment and just go in hard and get in early. And the other piece as well, the courage to be a pig. We know pigs are the most intelligent animals out there, they say. And it is a derogatory term, so sorry for using it. But however, Druckenmiller flips the term on its head, suggesting that sometimes being greedy when you have strong conviction in an opportunity is okay. Okay, so that's how I think he thinks about it. I'd love to interview him one day. That would be incredible. Anyway, so Mr. Apologist, yes, you're fine. Let the winners ride. Don't pivot just yet, but you'll see when I pivot. And hopefully we have a little bit longer runway to stack one of our favorite assets, which has become a very small asset as well. So as the other ones rise, the ones that you had a big bag of kind of automatically allocate themselves to. It's another important rule as well.